One of the question which constantly comes up, okay, this is great, but I'm sitting on so many X of Uber and Airbnb and
Sure.
Stripe, and when is the exit? What is your view on IPO, M&A
Sure.
market, and just kind of generally the
Sure.
exiting some of these investments?
Yeah. So I wrote a blog post about this earlier in the year, where it felt to me like a big wave of M&A was coming, and I think that that's really started to realize itself over the course of the last 6 months or so, and I think that will only accelerate over the next year and a half. And I think there's basically been two types of buyers who've really emerged, or actually three types. Number one, you have people from non-tech verticals buying technology companies, either for new types of distribution or for new technology. So that'd be like GM buying Cruise, or Walmart buying Jet, or Dollar Shave Club being bought. Like, these are examples of people from things that you'd never expect to buy technology companies starting to buy technology companies, and I think that will only accelerate. I think there's a second class, which is technology companies really filling out their portfolio. That's Oracle buying NetSuite. That's a variety of other large acquisitions that I think will be coming. It's LinkedIn being bought by Microsoft. And then I think separate from that, I think there's going to be a new set of companies that will act as acquirers for talent. And I think every 3-4 years, there's a shift in terms of what those most active companies are. So a couple years ago, it was much more Facebook and Twitter and Yahoo because of Marissa's changes. And then I think that now it's a different generation of companies who are doing all the talent buys, and I think that's an interesting transition to watch. Separate from that, I think the IPO market is likely, I think you'll start to see some exits in 2017 and in 2018. And so I think a lot of the companies that are sort of some of the bigger unicorns like Uber or others are likely to you'll start to see some more liquidity there, would be my guess. That's not based on any inside information on the companies I'm involved with. It's much more just sort of what you hear sort of in terms of the trends that are likely to happen and how bankers are thinking about it, and how at least what the press is exhibiting about some of these companies.
How do you think LPs should be looking at their portfolios, and when they back at managers, there are a lot of kind of thought process on the evolution of venture?
I guess over the last 10 years, I think there's 3 big innovations that have happened in venture. Number one is Y Combinator. I think they've completely revamped how early stage investing works, and how you can think about what entrepreneurs are looking for from their early investors. I think number 2 is DST, and really pioneering these large late stage rounds without any control or a few control provisions, and really being founder friendly, but also providing very large sources of capital. And I think a lot of people have copied that model. And then lastly, I think AngelList, in terms of thinking through how do you create, and some of the things that you folks have been doing that are related, how do you create a distributed platform by which any investor can start to get leverage on their time and capital. And so I think those are the 3 sort of trends that are really interesting to watch, because each one of those has morphed into things that are happening more and more. So there's SPVs being run by people who effectively are in some sense mimicking DST. There's more incubators like Science who are basically looking at what Y Combinator did and asking, how can we do a slant on this? And then you have basically the emergence of more and more early stage investors who in some cases can get people to back them for smaller chunks of capital, but which allows them to really become more active angels. And so it's almost this democratization of angel as an asset class. And so I think all 3 of those trends are really fascinating to watch. And I think certain aspects of them will accelerate over the next couple of years.
Well, let's get dig deeper into kind of the AngelList phenomena. It's been really amazing to watch, but it's also been harder for LPs to get their hands around. It seems like AngelList is developing more into a marketplace, the next NASDAQ rather than the next Sequoia. So it's kind of harder to get your hands around. I know you've run some very successful AngelList syndicates. How do you think, or do you think institutional investors will be able to participate in something AngelList like? Or what that would look like?
Sure. If you look at AngelList, they have 2 structures for that. One, for example, is you could create your own fund on top of AngelList that's backing specific individuals. I think, for example, CSC has a deal that they've announced with them. There's things like Maiden Lane that was established to back different angels on the platform. Or you could just join syndicates directly. So I think that there's a few different mechanisms by which you can participate. obviously Trusted Insight is also building out a platform that allows people to work with different fund managers and things like that. So, I think there's a few approaches.